Good afternoon, traders. Today is Saturday, April 29th. I've kind of been on incognito, but I'm not completely absent. Hope to have just a couple more weeks left of a very busy schedule during the day and during the evening. But nonetheless, here we go. Next week, we have a big showdown, ladies and gentlemen. FOMC, Wednesday. We also have a collision course with the Hive and the October 19th gap at 421.22. What I'm going to show you today are some not so coincidental patterns that are leading up to this coming week. You're going to be astounded at what has transpired these past, we'll just say 4 months. We'll just say since January, beginning of January, 4 months. Without further ado, let's get to the mission objectives for today. I'm going to talk about SPY levels. 421, 431, 462, 487. Where in the world am I getting these numbers from? You're going to find out. The Hive, October 13th, and some macro patterns that has led to this Friday's close. Actually, Dixie, the dollar, the VIX, XLF, financial, and then we'll get into some intraday tweets where I have some swing trades that I made this week. Swing trading is going to be my preferred mode for now because I don't have the ability to babysit during the day, the day trading. So I'm going to have to resort to swing trading for the next couple of weeks. Okay, what you're looking at right now is SPY. And this is Friday's session on Friday. Look at 421, August 19th gap right there. Okay? Look at 418.31, February 2nd high right here. Keep in mind, you take 418.31, guess what, you hooligan bears who love to try to heckle me and try to prove me wrong in March, only to get smashed in the face and zeroed out in your puts because you're a bunch of Ron Walker wannabes. The too high. If that is taken this week, which it will be, that's a higher high, suckers, from February. And February is a higher high, suckers, than December 13th high. As I've been saying since January, you are being duped once again. You guys think this is a bear market, counter trend rally. You've been suckered. Since the October 13th low, we are making higher highs, and we are about to do it again this week when we take out 418.31 from February, and then we're going for the Hive at 420. The Hive, for you newer viewers, is the October 13th low. The low, by the way, that is the low for the market, for that bear market, which 2022 was a bear market. We are no longer in a bear market. Now, 421.22, October 19th gap. There you have it. That's what we're going for. And for you hooligan bears who have been proven wrong once again, this is the episode that I did on January 29th. To be precise, I called SPY 421 in January. In January, I used math, and I'm going to show you that in more details. Okay? I love to rub it in you not so grateful 1 percentile hooligan bears. We're just nasty. So I love to rub it in your face, even though you've been proven wrong week after week after week after week. And I've been proven right. Everything that I've said since January has come true. Everything I have said since January and December that I've said about the VIX, the dollar, SPY. All of it has come true when all of the YouTube channels, all of them, were predicting gloom and doom. Not a single one of them were calling these levels to this level of detail like I have. And if you say that they have been, I want you to leave the link to that YouTube episode of theirs in the comments section and tell me at what minute marker they made the same comments. Because I will tell you that not a single one of these YouTube channels or the media were saying what I was saying since January. That is a fact. So, SPY weekly chart. Ha 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 ha. I want you to call your attention to the week of April 26, 2019. In fact, here, let's see. Let's have a look here. Here we go. In a previous YouTube episode, I said, you guys, only 2019 is the base year you can compare 2023 to. No other year in the past. Not 2008, not 2020, not 2000.com, not 1979, Paul Volcker, not 1956, not 1939, not 1929, the Great Depression, the Great Stock Market Crash. None of those years apply. I have said that for months. None of them apply. Why? Because the price action of all of those years have never reflected $9 trillion in the system like it has in 2020 and 2021. None of those years in the history of the stock market has reflected the amount of money and liquidity in the system between 2020 and 2021. That's why none of those years can be compared. None of those price actions, none of those head and shoulders, none of those cup and handles, none of those hangmans, none of those bear flags that all of the YouTube channels love to talk about from previous years. Oh, look at this. That's the same looking bear flag. Because they have no idea what they're talking about. They have no idea. They actually didn't study finance courses. And I'm going to do a crash course with you all today of episodes I've already done. This is all about math. It's always been about math. What you're looking at is 4/26/2019. And I have said this like a month ago. I said, look to 2019 if you want to compare what 2023 is going to do. Look at the week of 4/26/2019. Up, 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 up. The following week made a higher high, then down. Okay? Let's go back to today. Up, 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 up. The following week is going to make a higher high compared to the February high, then down. Hello? Yeah, that's right. I've been saying this since January. It's going up. 100% of what I've been saying since January has happened. Okay? That's a fact. All of you guys have been silenced. All of you bears. I'm not talking to all of you guys. All of you 1 percentile hooligan bears, ungrateful, have been silenced. You have been silenced by the market maker. And I've been trying to tell you this is what the market maker's doing, and this is what the market maker has been doing. Okay? Sorry, not sorry. I'm glad all you hooligan bears have gotten zeroed out. Okay, so you're going to see in yesterday's tweet, intraday actually, when I said, hey, so in the final 30 minutes of the trading today, it's going to go after the April 18th high, and if it takes it, it's going higher next week. That's what I thought. Okay? So, market's priced in. January 14th to be exact. January 14th to be exact. I did an episode on this. I called for SPY 421 also at that time. And you're going to see now the financial underpinnings that drove this market action since January. You're going to see the financial underpinnings that the algorithms are based upon, and that were developed by these, those smart Harvard business grads that are outsmarting you bears. Okay? That's what I've been trying to tell you since January. You're being outsmarted intellectually by grad students in business school. That's why you keep wondering, well, how come it's not going down? How come it's not going down? How come it's not going down? Okay, here we go. In that session on January 14th, when the markets were priced in, I want you to look real closely. I did this. No recession, mild recession, moderate recession, deep depression recession. Okay? The average 10.5 year return for SPY is 15.42%. That's the average 10-year return. Precisely from 2009 to 2019, right? That was 10.5%. I'm sorry. 15.426% is the average return per year for the last 10 years. So, using math, finance, that I learned from the university, that I've had final exams over, by the way, and these are the same equations that these Harvard business grads are developing, that the algorithms, the market maker algorithms, are following. And there are reasons why you can't explain why we don't keep going down, and we're making higher highs and higher lows. Okay? So I'm going to have to tell you again, but in the event that you don't understand, even after I review all of this again, I encourage you to go back. I'm talking to you 1 percentiles, not to all of you YouTubers, by the way. In the event that you still don't understand what I'm showing you, I encourage you to go back and get your GED. Okay, it's well worth your time and your money to go back and get your GED. All right, so 15.426 is the average 10-year return. No recession, okay, then it's 15.426. Mild recession, I knocked off a couple of percentage points, 13.426. Moderate recession, I knocked off 5 percentage points to 10.426, okay? In that YouTube session, markets priced in January, in a moderate recession of 10.426 return. That's really low, guys. That's a significant drop from the 10-year average. SPY is at 421. Hello, that's where I got the number from. That's Finance 101. Taking a 10.426 return, compounded annually over the next 3.3 years, from September 19, 2019 until January 14th, when I released that YouTube video. That's 3.3 years elapsed in this time period. Over 10.426 compounded annually, you arrive at SPY 421. Yeah. And where in here do I talk about, oh, let's look at 2008. Oh, let's look at 2000. Oh, let's look at 1979, Paul Volcker. Oh, let's look at 1929, crash. No. None of those matter. 2019 matters. That's why I chose 2019 as the base year for comparison. So instead of getting your information from the media, from Mike Wilson, CNBC, from the maverick of Wall Street, who has kind of gone incognito, defunct, because he can't explain himself why the market keeps going up. Okay? There you have it. This is math. This is finance that they teach you in the universities. SPY 421 is a moderate recession scenario. In the event it's a mild recession, SPY 460. In the event there's no recession, SPY 487. Guess what? 487 is higher than the January all-time high of 2022. that sink in. That's if there's no recession. That's if there's no recession and you have compounding interest using the 10-year average, 15.426 over the next 3.33 years since September 19, 2019, you're supposed to be at 487. Okay? This is just straight math. There is no debate. There is no debating with me on this, because I did this on January 14th. I said SPY 421, and look where we are as of Friday yesterday. There you have it. I don't care about what you got to say about some stupid patterns from the past years. Okay? They don't matter. So, this is from the Fed website. This is the total assets. So, I'm going to call your attention to something before I show you the next slide. This is the total assets. Here's the $5 trillion that the Fed added to the balance sheet. This is $9 trillion up here at the top. This is $4 trillion as of 2020. They added $5 trillion right here. $5 trillion has been added since 2020. Okay? The majority of this is what they call M2. M1 versus M2. M2 money supply. M2. Okay, you got this? This is also the same trajectory as CPI inflation. I've done another video on that, but I'm not going to get into that in details. I'm just going to call your attention. This is largely M2. M1 is the physical money that they have in the banks that you and I can withdraw from the ATM machine. M1, that's nothing. That is nothing. That's chump change. M2 is what businesses and the world are operating on, not M1. Not the physical cash that you and I can withdraw from the ATM. That's nothing. Okay, so you guys like to watch Wealthy On? You guys know Adam Taggart? He's a pretty good guy, actually. I like him. So on this particular YouTube video, you could I intentionally saved this. I actually tweeted this back on April 9th, guys, about 3 weeks ago. Look what Adam Taggart says right here. I turned on closed caption. On this video, there's a 70% correlation between M2 and inflation. CPI. M2, what I just showed you on the previous, a moment ago. Total assets, $9 trillion. Yeah. The Fed has caused this. It has nothing to do with the interest rates that they're talking about pausing next Wednesday on FOMC. It was always about the money supply. Always. It was never about interest rates. That wasn't what was going to take CPI inflation down. What's going to take CPI inflation down is the Fed total assets and M2 money supply. As Adam Taggart also says right here, there's a 70% correlation. I think it's higher than 70. I think it's closer to 85, 90 between M2 money supply and inflation. There. Boom. Okay. All right. Here's the same slide that I showed a moment ago about no recession, mild recession, moderate recession, right? Here are your levels that I did back on January 14th. Look at that. I mapped them out. Pink lines. No recession, 487. Mild recession, 462. Moderate recession, 421. Yeah, there you go, guys. This pink circle, that's the February 2nd high. Oh, we're going to take that out. That will make it a, that is going to be higher than that. Is going to be higher than that. Oh, yeah. And then what's going to happen? Let's see, 421. This is the gap. This 421 is the gap right here. August gap right there. It's all right in here. And what you can't see, right? Yeah, I don't have it drawn in. The hive is right here. That's the hive. Okay? Now, 431.73 is the August 19th high. That's the question. Is it? I'm not going to make a prediction whether it actually goes there this week. I'm not going to quite go that bold. I think 421 is going to be taken. This range right here, I think that's going bye-bye. I think once it takes it, it's an open question whether it actually keeps, to everyone's astonishment, keeps going, or does it now actually go down? Now retrace down, retrace some of it as you enter the summer doldrums. We'll see. We'll see. Because, let me back up a little bit. Here, check this out. Here we go. You go back to 2019. Yeah, see? Here's the following week that we're about to enter FOMC. This would be equivalent to FOMC week right here. See, then we went down, summer doldrums, and then whoop, went even higher. See? I'm telling you, this is the pattern we're following. I said this about a month ago, 3 weeks ago, because this is the same MACD pattern right here. It's crossed the zero line. It's above the zero line, separated from the signal line. Look, above the zero line, separated from the signal line. There you go. Look for more of this pattern. Down, then up even higher. Down, up, 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 even higher. See? That's what I'm talking about. Okay? So let's go back to that. There. Here we are. Once again. Very interesting. You know, that's debatable. I think ultimately it's going to hit 431, but I'm not saying that's going to happen like next week. So, because it's just look at these scenarios: moderate recession, mild recession. What if, after all, the market makers know, all those Harvard business grads know, oh, this is a mild recession. Oh, crap. Then we're going to 462, guys. 462. Look at this. Okay, I did this. Look at this. This is crazy. I did this in January 14th, right? Because here's the date, January 14th, when I did this video. Look at that. 460.37, 487.96, 421. This is just straight math, guys. Straight math calculations. Look at how these levels, 462, coincide perfectly with these peaks in 2022. Look at that. Okay? It's like, wow, that's just there's no other way to explain where these weekly pivot points could come from. And so it's just uncanny that, and it proves all of this was pre-planned out way ahead of time. Way ahead of time. When on August 19th, when that gap was left, they already knew they're going to come back and fill it in May of 2023. That's what I'm trying to tell you. They already knew. This was all planned out. All of it. You want to see more evidence that this is planned out? Here we go. I'm sorry. This is the, oh yeah, right here, down here. 260-minute chart. 65 minutes times 4. The 4-hour chart on the 65-minute time frame. Here's the hive. October 13th, wick low. See that right there? Are you going to tell me, watch this. This is going to blow your mind. SVB was on this day. This was Jay Powell when he spoke. Boom, collapse. Came up, touched the hive exactly, and that was your random black swan event? Hell no. That was planned, guys. This was planned. that SVB was going to take the fall, and that was going to be justification to tank it even lower down here. Okay? It was planned all along. Look at this. It made a higher low, and then we went right back up to the high, and here we are again today. Oh, sorry, that's today. Okay? This was exactly planned. SVB. You can't come up here. I'm going to show you another slide too that just proves it. This is the hive. And by the way, that also SVB peak right here also coincides with the 4-hour EMA 50 line. I'm going to show you that tweet that I sent around the SVB manufactured crisis that proves it. Look at this. Look at the hive. 418. You're going to see me talk about this in tweets in a few moments as well. 416.06. Okay? I tweeted about this yesterday. I say, hey guys, in the final 30 minutes, it's gonna try to take out 416.06 from 418, and if it does, that means that's a higher high than that, and it's going higher next week. Hello? That also coincides with the hive right here. This is all manufactured, pre-planned, a game. Here's the proof. Here's the proof. On March 11th, 2 days after this SVB manufactured collapse right here. This is the tweet I'm talking about right here. See that? That also coincides with the hive. Look at this. I'm going to zoom in so you can see it. This line, this red line, is the 4-hour EMA 50. You're going to tell me this is when Jay Powell spoke. Oh, down, and then back up. Rejected at the EMA 4-hour EMA 50 exactly, and then down, because that was a random black swan event. BS. This is a classic intraday. This is a classic intraday rejection at an EMA line. That was classic. That was totally orchestrated. And I'm showing it to you right here. Down, up, down. Perfectly. Oh, that was random. Oh, nobody saw that coming. Look at this. I'll let you read it for yourself. Once again, y'all just getting played. This is why I don't watch the news. This is why I don't care about the news. The technicals will tell you what's going to happen. The technicals will tell you what's going to happen. I don't care about the news because all of that is perfectly placed. It's just a big shell game. Okay? SPY, 195 minute. All right. Okay. Here, let me actually, I'm going to call your attention to 413 right here. Right here. You have 413. 413. This is the 195 minute. On this day, I'm going to show you that tweet in a minute. I commented. I said, you know what? Yeah, you're cheating. Market maker's cheating. You're cheating fate. What do I mean by that? Oh, it was going down. It was going down. Then they short squeezed it up, only to delay the inevitable, because if you take this short squeeze out and you draw the line from here to here, yeah, it went down. Here's the tweet. I'll give it to the market maker for cheating fate, but you cannot cheat massive bearish divergence forever. This morning, the MACD was headed to the zero line. Right here. It was headed to the zero line, but a short squeeze flattened out and curled up just above the zero line, and that stopped the fall. But what happened after the squeeze wore off? Oops, you're back down here. And then that led to the last 2 weeks. See? I called it out. I called it out back then on April 13th. I said, oh, you're cheating. You're cheating. So when you look back, this continued up move, but then resulting in the down move, is what I was talking about by cheating fate. This down move was fate. Cheating fate because they squeezed it up just a little bit longer, then they went down. So looking back, you're just buying time to get to today. They didn't want to take it down too soon. They didn't want to take it down on the 13th here because that's too far down. That's too much ground to cover now to go back up. They had to go a little higher, then go down, then go back up. See? That's very clever. So I'm going to remember this. I'm going to remember this. Next time I see market makers pulling something like this, I'm like, whoa, 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 what are you doing here? Now I'm going to know. If I see this similar pattern again, like, you should have crossed that zero line. What are you doing? Instead, you start going back up. I'm like, oh, you're going to go back down, but you're going to go back up a little bit first. You're going to go up for a little bit longer, and then you're going to go down. I got your game next time, bud. Okay? Uh-oh, the dollar, oh no! Back on February 18th, I talked about the dollar. I said back then, I said, if you want to watch that video, February 18th, I said, dollar, you are not going to take 104 back right here. That's what I was talking about at the time. I said, you're not going to take it. You're not going to take it. You're going to pop your head above it. You're going to pop your head above it, maybe get to 105, but you're not going to take it. You're going to fall. That's exactly what happened, and look where we are today. Now, I drew this pink line, I think it was last week or a couple weeks ago. Look closely at what's happening now. This is going to be interesting. Yeah. Now, okay, see, look, it's very subtle. You lost it. You're getting rejected by it, and now you're wicking down from it. Okay, now you're under it, technically. You're under the pink line now. See? Very subtle. So we're going to see what happens, guys. You know, this is angling down. This can continue to kind of angle down, angle down, angle down, angle down. It doesn't necessarily have to start whooping and go back up. Because we all know if the Fed pauses this week, how in the world is the dollar going to go back up? How? Okay? So, that's the dollar. Oh, VIX. Ooh, man, 1578. Hey, guess what? Last time the VIX was in 15, they call that a bull market. They call that a bull market, guys. God. I said last week or the week before. Oh, yeah, VIX. Look at this. I drew this channel line. I said, yeah, VIX is going to go down into this channel line. But I said, I'm going to give VIX the benefit of the doubt. I think it's probably going to hang out above at the top of this channel line and then possibly go up higher. But now that all depends on whether after SPY makes that 420 high, a higher high than the February 2nd high, is SPY going to go down? Or will it continue to maybe go up? Haha. If that's the case, VIX will continue to go down deeper into this channel if SPY continues to go up. So I won't make any prognostications on that. I'm just going to tell you what to think about. Okay? Just because SPY closes that 420, 421 gap, it doesn't mean it has to go down. Because I'll call your attention to February 2nd high. The collapse downward didn't happen until February 16th. That was another 2 weeks later. 2 weeks later, it finally went down. It doesn't have to just go down as soon as 420, 421 gets hit. It could hang up there for a good long while. Might even actually keep going a little bit higher. But I'll just let you all debate that amongst yourself. I don't have an opinion about that. Ooh, VIX monthly. Oh, Guys, I've been saying this since December. I've been saying this since February. I said at the time in February, oh, no. This monthly EMA 50 right here, that monthly EMA 50, that ain't going to be taken back. The VIX is weak. And what happened? Yeah, you saw this. This was the manufactured SVB, fiasco. But what happened in the end? Once again, I'm going to reiterate because I'm going to rub it in you 1 percentile bears' faces. Everything I have said in December, January, February came true. 100%. Right here. Look at the dates that I do these videos. It came true. Nothing you have said has happened. Nothing. That's why I'm going to rub it in your faces, because you deserve it, because you're nasty about it. That's because you're nasty about it. You start attacking me on YouTube comments or even on Twitter. Not only do I fire back, I ban you, I shadow ban you, so nobody else can see your comments. Okay? So, look at that, guys. This is the monthly. This isn't even touching the EMA 50, guys. Ooh, that's hella bearish for VIX. You're not even touching this anymore. That's a rejection off that line. Because the MACD says, and has said since December when I did this, 4 months later, here we are. It doesn't have momentum. And at no time did I talk about what happened in 2008, the VIX? What happened in 2020, the VIX? Well, what happened in 2000, the VIX? What happened in 1979, the VIX? What happened in 1929, the VIX? If the VIX was even around in 1929. I don't care what happened in those years. It has nothing to do with those years. You have to look at the MACD as it stands on its own for this year. Or if anything, look at 2019. Because 2019 has the most similar financial underpinnings as 2023. 2019, there was $4 trillion in the market by the Fed balance sheet, M2 money supply. $4 trillion. 2020 and 2021, they added $5 trillion to make it $9 trillion. So 2019 is the only year that you can reliably compare the 2023 patterns to. That's it. That's it. Too bad for you, VIX. Yikes. Okay, XLF. Oh, look at that. This is the weekly chart. Look at that. Look at that. Look at this. Up, down, shallow pullback. Up, down. Wick up, shallow pullback. MACD flattening out, curling up, higher, low, higher, low. This is XLF. And once again, I'm going to rub it in your faces. So much for your 2008 Great Financial Crisis comparison that you tried to do, you hooligan bears. On the SVB Credit Suisse fiasco. Oh, here we go. Another Lehman Brothers. I saw it in the news that this is Lehman Brothers 2.0, and this is GFC Redux. I don't think so. I don't remember GFC 2008 making higher highs and higher lows in March. You got sucker punched. And actually, I'm glad, because you're ungrateful. I'm glad you got smacked in the face. Actually, after you took the pies in the face, while the pie was still in your face, somebody actually punched you in the face after the pie was still in your face. And you deserve it too. Okay, there we go. This is the 5-minute chart. Intraday on Friday. I only have a few slides. We are approaching a critical zone. You're going to have to commit this to memory, guys. We're going to have some crazy stuff happening this week. We're just going to go backwards. Here we go. This is at the end of the trading day. No matter what happens next week, one of these four will be true, like on a final exam multiple choice test. Pump and dump, dump and pump, pump, dump, pump, dump. One of these four will happen on Wednesday. I cannot tell you which one of these four will happen. One of these four will happen. Right? You guys can debate that amongst yourself. Which one is going to be? I don't know. Just get ready. Look out for one of these four. Okay? So, here you go. Extended hours. Okay. Extended hours took back 416.06. What is that talking about? That's the April 18th pre-market high. Yeah. That's what I was talking about earlier. April 18th. Now is April 28th. Yesterday was April 28th. That was 10 days ago, a week and a half ago. But guess what? It took it. Well, it was right here. Was it right here? Yeah, it was right here. It took it. I was calling it out. 6 minutes left. But I almost forgot. There's also extended hours. 6 minutes left. Right here. It took it. 416.06 from the previous high on 418 was taken out right there. Right in the final 5 minutes. Well, actually, right in the first 5 minutes of extended hours. It took it. It's going higher. Okay, here we go. Yep, now that since we're talking backwards, 416.06 from 418. If it takes back in the final 35 minutes, we're going backwards. Now we're going backwards in time. Here it is. That's 418. That's today. Look left. Boop. Higher high. We're going higher. That's just the way it goes. Okay, these are just some swing trades for your information. If you're interested in possibly getting in on some swings on JPM calls, URA, uranium calls, and actually you're going to see me talk about gold calls as well. Okay, so this morning, yeah, I just threw up the 195 minute. Let's just zoom in a little bit here. The 195 minute is strong. Look, this was this morning, guys. This is before opening bell. Look for 416.06 pre-market from 418 to be taken today. Ha! I called it before the opening bell. It's going to be taken. The 195 minute is strong before opening bell. I was like, oh yeah, we're going up. There you have it. Okay. Okay, what do we got here? This was, oh, my slides are a little bit backwards. Okay, so this would have been right here. Right here. Right there. Right there. This tweet. Okay? The 65 minute, 195 are still strong. I mean, basically, guys, I wasn't available to just trade minute by minute at all this week. I mean, yesterday was Friday, had a little bit more time, but even then, I wasn't calling out minute by minute plays on all this stuff. I came back and sent out the tweet right here, which is equivalent to right there, that, yeah, watch for the MACD to start curling up. The 65, the 195 is still strong, okay? 5 minute consolidation along SMA 20. A consolidation along SMA 20. Watch for the MACD to start curling up. Let's see here. Oh no. Oh, I don't have the MACD. It's right here. See that? It's going to start curling up, and yes, it did. It started curling up. Okay. So, okay, here. This tweet was right here, right there when I sent that tweet out. What did I say? Let's see if it's a dip fake. Oops. Let's see if it's a dip fake, then resumes upside, which I suspect it will do. Dip fake up. Okay? There you have it. Oh, okay, here we go. This is more details right here where I circled that tweet right there. It's going back up to closing boom, up. I was watching the EMA 50 backtest. All of a sudden, obviously it goes under, and then back from under up top. Okay? There's gold. Feel free to swing long. I did. Okay? So, that's gold. So, JP Morgan, uranium, and gold. Swing along for a little bit. And feel free to follow me on Twitter. Well, maybe these days. I don't tweet intraday so much. It's going to be like that for the next couple weeks. That's my guess. Don't forget to listen to your favorite music while you're trading. It helps you get in the right state of mind. Helps you get into the right flow state. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 000 signing off.